You've finally done it, the numbers are in green, your account is growing, and that sweet moment of profit hits your balance. But here's the truth that most traders and investors never talk about. What you do after you make money matters even more than how you made it in the first place. Too many people lose everything they gain simply because they never had a plan for what comes next. They let emotions, greed, or impulsive decisions take control, and before long, the market takes it all back. So in this video, we're diving deep into what you should actually do with your profits, the steps that will not only protect your gains but also help you multiply them intelligently. The first thing to understand is that profit is not a reward to splurge, it as a signal. It tells you that something worked. You made a correct decision, executed your plan, and now you have data that proves your strategy is viable. So your first job isn't to celebrate, it's to analyze. Ask yourself, what exactly worked here? Was it timing, strategy, patience, or a specific setup? Take notes, because your profits are teaching you something. The money is evidence of your process, and successful traders treat that evidence with respect. Now, let's talk about allocation, because not every dollar you earn should serve the same purpose. Think of your profits as soldiers. Each one needs a mission. Some of those soldiers are there to defend your financial base, that's your savings, emergency fund, or insurance coverage. Some soldiers go out to fight, that's your reinvestment capital. And some should be rewarded, that's your lifestyle improvement or personal reward fund. The mistake most people make is throwing all of them into battle again with no backup plan. That's how people blow up accounts and lose years of effort in a single bad month. Here's a professional rule. Every time you profit, pay yourself first. Take out a fixed percentage of your gains, even if it's just 10%, and move it into a secure and touchable savings or reserve account. This isn't money you'll trade again. It's money you've successfully extracted from the market. By paying yourself, you're building confidence and stability. Remember, your goal isn't to impress the market with huge wins. It's to consistently keep a portion of your profits in your pocket. Next, reinvest smartly. You don't want all your profits sitting idle, but you also don't want to blindly throw them back into the same trade or the same market. Diversification isn't about being scattered. It's about reducing dependency. If you made your profits from Forex, maybe move a portion into dividend stocks or a low-risk ETF. If you're in crypto, consider moving some gains into stable assets, or even into your personal development courses, books, mentorships, or tools that enhance your skills. Investing in knowledge often yields the highest return. Another powerful move is compounding. The rich don't chase new money, they multiply the money they already have. Let's say you've made $500 profit. Instead of spending it, you reinvest it into a proven, low-risk system that yields 10% monthly. That $500 becomes $550 next month, $605 the next, and so on. It doesn't look exciting at first, but over time, compounding is what turns small consistent wins into serious wealth. Warren Buffett built billions using that exact principle. Now, there's something equally important: protection. You can't grow wealth you can't protect. That's where insurance, emergency funds, and risk management come in. Every successful trader knows that a single market crash, illness, or life emergency can wipe out years of effort. So before buying another trading course or upgrading your setup, make sure your financial foundation is stable. Have at least 3 to 6 months of living expenses secured outside your trading or investment capital. That's not fear, that's strategy. Then comes taxes. Many traders forget this until the government comes knocking. Depending on where you live, your profits may be taxable, and not keeping proper records can cause serious trouble. Set aside a percentage of your gains specifically for taxes. Even if you overestimate, that's better than getting caught off guard. Use accounting tools or hire a professional if necessary. Remember, the goal is long-term sustainability, not short-term flash. Now, let's talk psychology. Once people start making profits, overconfidence creeps in. They start believing they've cracked the code, but the market has a funny way of humbling everyone. The best traders use profits as motivation, not validation. They know one profitable streak doesn't define them, consistency does. Use your profits as proof that you're on the right path, but keep your ego out of it. The market rewards discipline, not emotion. Another smart thing to do with your profits is to give back, not necessarily through charity alone, but by contributing to something meaningful. Maybe you help a friend start a small project, donate to a cause, or even share educational content that helps others trade responsibly. Giving back creates balance and keeps greed in check. Money flows better when it has purpose. And finally, remember this: profits come and go, but process and mindset stay forever. The people who stay wealthy are those who use every profit as a lesson, every win as a building block. They don't chase hype or trends. They build systems, follow plans, and manage risk. Every time you make money, you're faced with a choice. Do you treat it like a tool or a toy? The answer will define your financial future. So here's your action plan: review every profit, understand why it happened. Pay yourself, secure a portion outside your trading account. Reinvest intelligently into diversification or skill building. Protect your wealth, build safety nets, and manage risk. Stay humble and consistent. Profits are temporary, discipline is permanent. If you stick to these 5 steps, you'll not only make money, you'll keep it. And that's what separates traders who last from those who fade away after one lucky streak. Before we wrap up, a quick disclaimer: this content is for educational purposes only. Nothing here is financial advice. Always consult with a licensed financial advisor before making investment or tax decisions. Remember, your financial future depends not on how fast you make profits, but on how wisely you manage them. Once you do, if you found this helpful, hit that like button, subscribe for more smart financial content, and remember, your profit is just the beginning. What you do with it is what builds your future.